Hey everyone, in this video I'll show you how you can build a consistently profitable Nasdaq setup using our DepthFlow Trading Bot. We're going to take a much closer look at the open range here and we'll be using the 5-minute chart for this part. For those who aren't really familiar with what the open range actually is, there are a few different approaches to it. That means some people focus on the first 5 minutes right after the market open. Then there are others who focus on 15 minutes, and there are also some who look at the first 30 minutes. We'll simply go over all the different approaches here. That means we're going to start with the smallest one, the 5-minute window. Basically, the overall setup always stays exactly the same. So for now, it doesn't really matter too much whether that's 5 minutes, 15 minutes, or even half an hour. We will definitely know by the end which of the three strategies is the most profitable. So first of all, we of course need to load in the open range. That means we definitely need our trading bot. We'll load it in and also set it here to 5 ticks to begin with. We'll use the Nasdaq here, which means the tick value is set at $5, and we'll also display the trading signals up front first. I'm going to activate only the volume for now, and the volume is set to 500 here. Of course, I can lower it to 50 so that I really get every single one displayed. Okay, after I've done that, I'll of course set up our open range first. That means it's already preset here to 9:30. We're going to adjust that now, setting it from 3:30 p.m. to 3:35 p.m. Yes, that means we'll take a closer look at the first 5 minutes of the open range, and we'll have the full entire range displayed all the way until 8 p.m. After we've done that, we'll take a closer look at what we want to set up right here. Yes, for that we'll zoom in just a little bit here, and here we can see, for example, a really nice breakout. Once to the upside, about 56 ticks. I don't personally like this move downward all that much. Yeah, you can see it here as well. We do break out just slightly here, but the market doesn't actually go down very much at all. So it comes down here briefly, but then it goes back up again. Here I have a pretty nice breakout. For example, this is a really nice breakout right here, about 58 ticks above this. And here as well, I have a few nice breakouts. Of course, that would theoretically also be one. We move above this up here, which is actually more what I want to see. Okay, so that means we now need to clearly specify to the bot which trading range it is actually even allowed to trade within. That means we now go to our range right here. And first of all, we set how many ticks at a minimum it should be positioned outside of this range. That means for the long direction, it should be positioned at least 30 ticks above this range. And we also define a maximum value as well, which we can possibly adjust again later on. I'll just go with 200 ticks for now. And on the downside, I'm doing exactly the same thing here, setting it to at least 30 ticks below that range with a maximum value of 200 ticks. Okay. After we've completed that, we can go ahead and run the backtest now. I've already preset it to 20 days, and we'll first take a look at what the result is going to look like. So with that, we already have a profitable setup. We have a hit rate of 56% here, an RRR of 0.9. That's of course because we set an RRR of 1. You know, this here subtracts the fees, and then we're at 0.99. That means, first of all, we could, of course, just bump up our risk to reward ratio a little bit and say we want at least a 2.1. Let it run again now. I re-enabled the tick data once more. I'm taking that out now. So now we're getting to 13,000, and naturally the hit rate drops accordingly, which for now doesn't really matter very much. I'd try this again using a 3:1 ratio to see whether we can get a somewhat better value here at some point. So, of course, we have to say that we've got $27,000 versus $10,000 in losses. So, if I just take the whole thing as is and put it into the micros, yes, of course we can do that. That means we'll just go ahead and make it 0.5 right here and set the commission to $1. Then I'd already have a profitable setup here that I can basically let run like this in the micros. That means I'll program it in exactly the same way and just let the market run through here like this. Now, of course, we can take a closer look at the risk parameters first. Yes, we're going to get stopped out a few times here too. We're currently, of course, also in a pretty strong uptrend. Nevertheless, I still want to give the market a little more room overall. Yes, that means I would set the minimum stop loss at around 250 ticks. We mustn't forget that this is the 5-minute chart, which means we want to give the market a bit more breathing room. We're trading micros right now and we're taking a closer look at the result here. Okay, now I'm reaching $6,000 within 20 days here and I'm sitting at a drawdown of $1,500. That means as soon as I naturally increase my risk, it also increases the corresponding risk to reward ratio. Okay, let's go ahead and continue looking at the trades for now. And of course, I can clearly see here that I have some trades that are still carrying over beyond the day. I definitely don't want that happening at all. Yes, that means I also have to specify to it now when it should close the trades here as well. That means that here in time management as well, I'll go ahead and set it once again on my end to 9:45 p.m., 9:45 p.m., and then we'll take a look at the entire thing. Okay, then it's really only $3,000. What we can clearly see here is that he's opening a very, very large number of positions, right? We've set it relatively low for now, so of course I don't want him trading with too many contracts. So I go ahead and go into the risk parameters and tell it that it can use a maximum of 2 contracts. Yes, and that means we're now going to take a look at the result. So this brings my drawdown down here, right? And that way, of course, I'm preventing him from opening too many positions all at once and then potentially stopping me out again. I could, of course, just as easily specify here that, for example, once a maximum loss of, let's say, $300 has been reached, then he's simply not allowed to place any further trades at all. Of course, I can also monitor and see how the result changes. Does it improve or does it get worse? In this case, it has gotten a bit worse. But on the other hand, I can also tell him that if he has made, let's say, at least $500, then he shouldn't make any further trades after that. Okay, yeah, so of course you can take another look at that and see whether it might possibly get better. And likewise, I could of course also say, okay, let's look at the whole thing here with 4 contracts. Yes, so that means a maximum of 4 contracts. And does this get any better here? It doesn't really get any better. I could, of course, switch back here to 2 contracts and then take a much closer look at it based on that. So, okay, we can, of course, also see here as well that it's still making trades relatively late in the day. In the end, he's also trading against the trend here, and that's always been the ongoing issue, you know? So now I can try to set up a proper trend filter here, of course. But first, I can also take a look and see whether I can narrow it down a bit more, maybe based on the specific times of day. Yes, meaning we actually haven't tried that yet. For now, we're starting here from 12 NOS AM. Yeah, although it makes the first trades anyway only after 3:35 p.m. And for the end time, we'll go ahead and set that now. Let's say 6 gal p.m. and then take a look at how the whole thing behaves at that point. It's not really getting better, right? That means we do have fewer trades here now, but the result is a bit worse now. And now, of course, I can take another look here to see whether I should adjust the time even further. That means I'll just go ahead and move it up to 5 p.m. for now, let it run, and I can see that it's not really getting any better either. So I'll go ahead and try moving it up to 7 p.m. for now. Yes, and now it has of course improved, but I also have a somewhat larger drawdown now. Okay. I'll just leave it like that for now. Yeah, we might need to take another look at the times a bit later. Now, I would do one thing, and that is that we're currently in a very strong trend right now, right? That means we really don't want to trade directly against the trend, right? Even though the signal still would have triggered here, of course. But of course, I do have a few breakouts to the downside here. We would have to take a look at whether that actually makes sense and to what extent it really makes sense. And whether we actually want to let that be traded. We of course have several different options for how we can determine the trend right now. Yes, for example, we have our trend filter. I could simply include that in here and tell it, okay, go ahead and look back at the last 200 candles. Yes, and then use that as a filter, although I can see that even with that in place, it would probably still pick up a few signals that aren't really all that sensible. Yeah, that means I can just enable this right here and then simply start running a backtest. Yeah, I can already see that my drawdown is starting to drop quite significantly and the PNL as well, right? But I have a win rate of 50% and I have an RRR of 2.56 shown right here. What I also like to use as an alternative to the trend filter, I mean, we could of course tweak it a bit more, but for now I would just take it out. What I like to look at here is the VWAP, but not the daily VWAP itself. The daily VWAP probably wouldn't really do much for us in this case. We can of course test that as well. Yes, and the drawdown is still relatively high. We also have noticeably more trades, a win rate of 50%, and the risk reward ratio was actually clearly better when using the trend filter. As a general rule, I take a look at the weekly VWAP here because anyone who knows my training understands how the volumes tend to build up, and that's exactly why the week is, of course, much more important. And now we're going to take a look at the whole thing. Yes, and I immediately get a noticeably better result. Yes, that means my drawdown is still manageable at $798, and I have a P&L of $7,203 here, a win rate of 50%, and a risk reward ratio of 2.69. Okay. Next, I'm simply going to take a closer look here and see whether we can get something useful out of the delta. I've now set the delta to 100 right here. I'll just leave it like that for now. And now let's take a look at the whole thing. I see, okay, the drawdown is going down, the hit rate is going up. Yes, the risk reward ratio has gone down a little bit, but that has also improved it slightly now. So naturally, the question now is whether those 100 are really good or whether we should simply go a little bit deeper here. Yes, if we go to 50 here, or let's just say we simply set it to 1, that means we can be sure that the candle will definitely close out with a clearly positive delta. We're at 77 here. How would it look if we didn't have 77? Now I'm taking the delta out again, just as an additional cross-check. Okay, yes, 77 is definitely better than 72. That means I'm telling him we absolutely want to have a clearly positive delta in the candle. Okay, so that means it has now been 20 full days and we already have a very clearly profitable setup in place. I'll let this run through again for just a moment so we can take another look at it. We're now sitting at $7,700 in just 20 days with 2 micros. Yes, with 2 micros. Of course, we really mustn't forget that. What we can of course do here is this. We do of course have a few trades here right at the day's high. We can also take those out for the moment and then see whether it gets better or worse. We're currently in a very strong uptrend, so of course it can happen from time to time that it places trades right at the day's low or the day's high. Okay, so that means we're now turning the daily high and low filter back on again, and we're setting a specific distance for it. Let's say 100 ticks up to the high. And for the short direction, I'm doing the very same thing as well, also setting it to 100 ticks, moving down to the low level. So I'll let this run through again here as well. Yes, and I can see that we're of course coming down a little bit. We'll need to take another look at that in a moment, so that means I'll deactivate it for now. What else could we do here? We could of course say that since right now he's entering using a market order, we could also tell him that he shouldn't enter at market. Instead, he should first, if you ask me, wait for a pullback. So that means after he has just formed the breakout candle, we say that we want to set this up here with the order type. Yeah, we switch it over to a stop order and tell him that he should wait for a pullback of, let's say, 30 ticks. That means we said he should wait for at least a 30 tick pullback, and after that he should take us along with it. That means he would then place the stop order above the candle. Okay, yes, we'll take a look at that as well. What we can see here now, of course, is that the win rate is steadily increasing, the drawdown is gradually decreasing, but the P&L has, of course, gotten a little bit worse for the time being because, of course, we're not taking each and every single signal. I would try here once again to see for how many candles the signal is actually still valid. If I go up a little bit here, we can see that we're rising again, although the risk-reward ratio isn't really improving any further right now. I'm just going to go up through the candles again here. I'm back to 7,000 here again, and I'm just going to set it to 4 candles here. That means that at times the market simply needs a little bit of extra time before it actually breaks out. But from here on, I really don't think it's going to get any better either. I'll do one more quick cross-check by specifying 10 candles, and then it ends up getting worse. That means I'm basically telling it, okay, a maximum of 4 candles, so in this case 20 minutes, the order is allowed to remain sitting there in the market. Of course, I could also try telling it here, first do a pullback of at least 50 ticks, and only then you can take me along. But I can clearly see here that the drawdown is getting even worse and the overall result is also getting worse. That means that at 30, the result was actually better. Now I'll just go ahead and stick with 25 here again, simply to see if that ends up getting better. 57%, we probably can't really get much above that right now. Alternatively, of course, I could tell him that instead of using a stop order, we'll go ahead and use a limit order instead and allow ourselves to get filled at a slightly lower price. That means on my end, it's now also set at 25 ticks, and then we'll see what the result ultimately ends up looking like. It's not really getting much better at this point. The hit rate has come down a little and the drawdown is staying about the same. What I have, of course, is a slightly smaller stop now because I'm entering about 25 ticks lower. Here too, I could of course play around with it a bit more and tell him, okay, we'll just try it with 50 ticks. We've also naturally taken out a few ticks there already now. The drawdown always stays exactly the same. The hit rate naturally goes up further here, right? But of course, I'm no longer getting some really good trades anymore. All right, we should probably keep that in mind one more time. I'm going to use a market order anyway, and I think this is already a pretty solid overall result for the 5-minute setup. And I would say, let's first take a look at the other opening ranges as well. Like I mentioned earlier, we had already set the 5-minute opening range. Now we're just going to change that really quickly and switch over to the 15-minute range instead. That means we'll adjust the entire setup and say we don't want to look at the range only until 3:35 p.m., but rather until 3:45 p.m. and after that we want the signals to begin showing up. Let's go ahead and run the back test once again right here, and I can already see that I'm currently sitting at $9,308 at the moment. Keep in mind, we're doing this with 2 micro contracts. Yes, you really can't forget that part. We're looking at a 58% win rate along with an RRR of 2.7, and the drawdown remains roughly about the same, coming in at 797. A total of 62 trades overall. Because we're entering with 2 contracts each time, that's actually 31 trades in total. And I think the result is already pretty presentable as it currently is. We'll run another cross-check here by changing the range to 4 cow PM. That means exactly 4 cow PM. And let's go ahead and display this right here. Yes, and we can clearly see that in terms of the result, the number of trades stayed exactly the same, but the result is actually quite a bit worse. Therefore, my personal favorite is the 15-minute range. That means that for an open range breakout, I would generally always prefer using the 15-minute range. And that's exactly how I would let the whole thing continue running like this. Of course, we can still do 2 more things right here. We can try to optimize the whole thing once again using risk management. That means we previously had it set to 3. I'm just going to set it to 4 for the moment. Well, come on, $10,000 right here. Okay, if we set the whole thing to 5 now, we'll be able to see whether we're still in a good position. Yes, nothing really changes around here. One more additional cross-check. At 6, is that correct? Yes, right, okay. That means that even in this case here, I would probably go down to 5. And we can take a look at one more additional thing here. Of course, we can see how all of the trades here developed and what the whole thing looked like overall. Yes, for example, I can see here that when I have a trade like this and it was already up by almost 500 ticks, it's of course also difficult to then give all of that back again. We could, of course, also enter that right here in our bot as well. That means point A, we can do that directly via the break-even setting, or we can say that it should start trailing, for example, only after 400 ticks or after 450 ticks. Yes, and I can see that, of course, I'm missing out on some really good trades because of that. That's why I want to give it a bit more room right here. And now I basically have 2 options. Either I set it here myself, say 100 ticks, and we can try that out first. Those really won't be quite enough either. Yes, for example, I could say here, okay, 150 ticks instead of that. Yes, and for the time being, the result will still end up being a bit worse here. The other option would be to say, okay, we're not going to base it on ticks in this case, but instead on candles. And we'll give it, say, room for 4 candles and then take a look at the whole thing overall. Yeah, in the end, it doesn't really get better either. That means, though, that here he takes the trade, but in return he also leaves a few pretty good ones on the table. And that, of course, is always the kind of question you ultimately have to decide for yourself on a personal level. I could, of course, also deselect the entire thing here, meaning that there's no trailing stop, but instead, for example, specify that if you were 250 ticks ahead, then you would be allowed to move it to break even. I'll look at that then, yes, and I'm at $12,000 here. Maybe I'll give him a little more breathing room here, just to see whether anything changes. Stays the same. I could, of course, go down again, meaning tell it, okay, if you've already been up 150 ticks, then you're allowed to move back to break even. Yes, and the result is worse here. That means we really do need to give the market a little bit more room to move. Maybe we should go back and check again using 200. Yeah, that's actually not any better either. I could, of course, also say if you were already 300 ticks ahead, then certainly go ahead and move the stop up to 50 ticks into profit. I could also take a look at that, and I can see that, of course, I end up with a couple of break-even trades because of it. All right, I'm going to take this out right here and just let it move up to the break-even level. If we take a look at the setup right now, it's been optimized for the most recent 20 days. And especially when I optimize a setup like this over a short period of time, I'm of course relatively close to the market. What can happen though is that as soon as the overall market situation changes, I have to adjust the setup in a suitable way accordingly. The setup isn't bad though. Yes, I may need to adjust my risk parameters and say, hey, you're not allowed to trade at the highs anymore when I'm in a correction, for example. Those are all things I need to keep in mind. Of course, I can also optimize the setup over a longer period of time, and for that, we'll just take a look at 100 days right now. So I've now loaded 100 days in here. That means we first need to download the tick data again and then start the backtest right here. And now I can, of course, clearly see how the result is changing. Yes, we optimized it here specifically for this time period. That all looks quite good as well. I mean, up here at the start, it also looked good, but in between we had a sideways phase. And of course, we don't want to have these kinds of phases, or rather, we want to take a much closer look at where exactly the problems were located here. So let's simply start by taking a close look at what all of this looks like right here. Yes, that means we want to take a look at a few of the bad trades and see how we can improve and optimize them. Since we're obviously looking at a longer time period now, it may very well be that we'll also need some different filters, and we're going to take a look at all of that right here now. Yeah, let's begin right here by looking at a few losing trades. Volume looks okay, delta looks okay as well, and the delta change, everything fits here too. The core impulse was relatively strong, which is good. Here we also have strong volume. Okay, but we might be somewhere around a daily high level here, and then we just need to see whether we can actually get rid of that with this. Here as well, I can see that the market is clearly moving upward. We previously had an accumulation zone right here, and from this point it moves back down again. The volume and the delta both fit as well. The delta might be a little on the high side, so you might want to take a closer look at that. What do we have here? Well, the volume is fitting again as well, and it's at such a high level. I would try doing it first and foremost by using the high and low filter. We have already tried that before. However, over a short time frame, if the market keeps pushing upward the whole time, that can sometimes be counterproductive. Okay, for now we will display the highs and lows, and we can see that something like this would, of course, most likely be removed right here then. I will activate it now and run the backtest right away. So we're roughly at about the same result now, but we have significantly fewer trades, yes, which of course at first glance speaks more in favor of that. The sideways phase looks better now as well. Of course, we still have this drawdown phase here. Yes, so what you have to consider here is the exact period when the time change happened. I can't just filter that out like this. Yes, that means I could, of course, take a closer look at the period after that, look at the period before that as well, and then it would be perfect. But I'm not interested in that at all. Yes, that means I want to optimize it so that I can simply let it run over a longer period of time, even if the range might not fit sometimes. So we've now noticed that we were able to get a little something out of this with the high and low filter. We'll take another careful look at the high and low filter and simply increase the values a bit more here. I'm just going to set it to 200 for now so that it should have at least 200 ticks of room available to work with, and then I'll run the back test again. Yes, I can see now that the results are getting better and the drawdown has also decreased. But that means I definitely always have potential at the highs and lows. I might just go back up to 250 again here, 250, and then run the entire thing through once again. Okay, yeah, now it has gone down a little bit again here, but the maximum drawdown is still holding up quite well. Yeah, the curve looks noticeably better now. If we take a look at the curve now, yes, then we can see the sideways phase. That already looks noticeably better. We're still moving upward here, and the market is definitely continuing to move upward here. I just test once again here to see whether I can improve this a little bit more over the week. That means instead of using the daily high, I'd simply use the weekly high, because that way, of course, not quite so many trades get filtered out for me. But I can see this is getting worse here. Okay, yes, of course, the day, now in a nice, strong trending phase, some trades just end up getting filtered out. Okay, that's not really a big deal for now. We still have another option available, of course. If I want to keep the high and low filter in place, but I also want to reduce the number of failed trades overall, we can do a couple of different things.
Point A is that I'm going to completely deactivate this one again, entirely.
Okay, so this is the result. I'm going to set it off to the side for now so that we can possibly compare it as well. I would simply review the risk parameters with him again and tell him that he should only trade using 2 contracts. That means if he already makes a losing trade here, then he's allowed to enter with a maximum of 2 contracts. That means he is not allowed to build up the position. If another signal comes in after that, then he is allowed to go in. But if he somehow got stopped out before that, then no, he is not allowed to. Now I'm seeing something here. Yes, of course, I still have this bad phase here. Yes, the drawdown is, of course, now only about half as large, but the profit is sitting somewhere in the range of around 8,000 to 13,000. The win rate is still exactly the same. Overall, everything basically looks almost completely identical. Okay, so that means it really didn't have any truly noticeable effect. We will definitely keep that in mind. So that means that now we'll just take a slightly closer look at the order flow values in more detail. Yes, and here we've set the volume to 50 and the delta to 1, which is relatively weak overall. With delta, we saw that using more makes it worse. But if we use a higher volume, that of course also indicates that there's more movement happening in the market. So I'll set that value to 500, and I want to go back to the risk parameters. I'll set this back to 4 here too, so that we can make an even clearer comparison. All right, just like we discussed, we're going to set it to 500. We'll begin fairly small for the moment and watch how this whole thing behaves here and see whether anything changes at all. So we can see nothing has changed here, right? That means it doesn't make any difference. Okay, that means we'll increase it to 5,000 contracts now.
And now let's take a closer look at how the whole thing continues to develop from this point forward.
Yes, our drawdown has decreased a little bit now and the win rate has risen to 46 from 43. Okay, of course, we also have a slightly smaller number of trades, but as I said, if the overall result stays the same and we're taking fewer trades, then of course that's a good thing. Of course, we can also say here that we'll go ahead and try it now with 10,000 contracts. Yes, and we can see that quite a lot is dropping out right here at the moment. Okay, so that's clearly not really the right solution. That means we can try moving up to 6,000 contracts here. It's not getting any better either, is it? So at 5,000, we had roughly the best overall results. So we're going back to 5,000 right here again. What we can, of course, do now is also cap the volume on the upper end as well. Yes, that means we can simply start with 10,000 and trade between 5,000 and 10,000. If it's above that, it either suggests that maybe too much is being traded, too much is being held, right? We just have to take a closer look at that. So what we're seeing now is that we've basically cut the drawdown in half, the win rate has gone up, and the risk reward ratio, has come down a little bit. But I still have this, not so nice phase here. But we can look at when that was 12/18. There wasn't much market movement then, and also at the start of the year.
All right, I would increase this here once again, maybe up to 15,000.
Yes, we can see that if I go with 15,000 here, I do end up with a really nice result, but the drawdown is, of course, also relatively high, right? What I can also clearly see here is the win rate. It has still remained stable. The risk reward ratio fits pretty well too, right? So we could check whether we might be able to get a little bit more out of it here. Perhaps if we set this to around 12,000. So we're here at 11 and yes, definitely at 2000. Okay, I think I would set it back to 15,000 again. Yes, of course, we can definitely do a thorough cross-check here, although I really don't think we can actually achieve very much at all here with 20,000s. So that has still remained exactly the same. Okay, so that means we will simply limit this here to 15,000 for now. That seemed like the best option. We can also take another quick look right away to see whether we can adjust that once again based on the timing. All right, we'll go ahead and set that aside for the time being for now. And now we'll take a slightly closer look at delta change. Yes, delta change is now set to 100. I'll keep it like that for now. And for now, I'm going to go ahead and run the back test here first. So we can see the win rate is going up. Yes, trades are of course going down. Drawdown has gone down a bit, but the score is already looking a bit better now as well. And the risk reward ratio has gone up a bit. And now, of course, we can take a slightly closer look at what else we might be able to do here. We can see up here there's a trade that didn't work out. Now I'm going to take another look. I think at some point I removed the trailing stop. Yes, that means we could certainly go ahead and switch it on again right here and then see how this whole thing behaves overall. Yes, that also means we could first take a quick initial look at it by using the candles. Yes, so we can see that the hit rate and the drawdown, everything is getting better at the moment. However, the market here may still need a little room to breathe. Of course, I do have several different options here. For example, I could tell it trail right now at a distance of 150 ticks behind. Just so I don't end up losing all of those really good signals. It's starting to look a little bit worse now, it seems. Alternatively, I could tell him, okay, if you want, we'll take a look at the last 4 candles first and then trade after that. And I can see that in terms of the results, I'm definitely a bit higher here. The drawdown is okay as well. Yes, that actually doesn't look all that bad here on the curve. Now, we could also do one more additional thing here. We could tell it that we're already taking a look at the entire thing after 450 ticks. So it actually gets a little bit worse. One more quick cross check. Let's go down even further again, down to 400, and see whether it might end up getting a bit better then. Yes, even if I go down to 400 now, the result will still be a little bit better. Yes, I would just take another closer look at the risk parameters overall. We entered a minimum SL of 250 ticks, and I might just remove that entirely here for a moment. That means we've adjusted quite a few things within the order flow parameters. That also means we're seeing candles with really strong volume. Okay, but I'm going a little bit further down. I could tell him to move the stop by 50 ticks, then I'll be back in the zone, or to raise this whole thing here a bit more again, maybe by around 100 ticks. Okay, yeah, now the drawdown is of course dropping even further, right? That means I'm getting stopped out even less often. I also have more trades. And now, of course, we'll run the cross check once again using 150 ticks. Yes, that could definitely be relatively quite a lot, although with micros, it's still pretty manageable overall, you know. Okay, it's getting a little bit worse here, so we'll go back to 100 ticks and take a look at the whole thing like this again. Okay, of course, I still have this somewhat weird phase right here. Of course, we can go ahead and take another closer look at the high and low filter right now. Can you check it? But like I mentioned earlier, in strong trend phases, of course, a few things will drop out for me. Yeah, but I can see here that I now have 82 trades with a hit rate of 73%. And a maximum drawdown of $1,000 within 100 days. That means we have 41 trades, so that's basically what it is. So that means it's not a trade every single day. I'd still like to go through the whole thing again over the course of the week so that we can simply take a closer and more detailed look at the entire week. 12 to 1500, and we can also go back and review a few trades here once again. Yeah, this is a nice trade here. Yeah, a bit of a trade. This was sometime around 6:20 p.m. Of course, we also have a fairly huge move here. If we take a slightly closer look at it, it ran up more than 1,000 ticks within about an hour here, yes. And shorting the market at that point really isn't all that effective, yes. That means I would take a look here to see whether I might be able to filter this out a bit better with the movement filter. That means we'll take a slightly closer look at our movement filter, and I'll just phrase it like this. Within 45 minutes, you're allowed to have made at the absolute most, let's say 800 ticks, and then we'll take a look at the result. Yeah, and it has already gotten a little bit better again here. Of course, we still have a drawdown phase here, but as you can see, we are slowly getting this, yeah, this sideways phase out of here, right? That means I've got a nice curve here. The CRV is good, 2.23. The result is good. Like I said, 2 micros. Yeah, still 2 micros. Okay, I'd actually maybe go back to the high pass and the low pass filter here and just double check it once again. We're here on the week, or maybe we should stick with the day after all. Like I said, with the day, a lot of good trades would drop out. Yeah, I would. The curve's getting better. The results also get a little bit better overall, and the win rate does go up, but somehow, personally, I don't like it all that much because, like I said, especially on the days when you might actually be able to get some really nice trades, those would end up getting filtered out. So, of course, we still have a few options to narrow this down even further. If we take a look at it, we actually already have some pretty nice trades here. It's not necessarily a trade every day, so you definitely have to keep that in mind. For instance, you can see a period here where there really wasn't any trading activity at all. But then over here again and here again, you have a period with very few trades, or basically no trades at all. Then again, here and here and here, right here, I have a trade, for example. Of course, something like that is not really very nice. We're clearly in a downtrend here, right? I mean, the weekly VWAP, this is basically the start of the week, tries to trade up and out here, but the market is actually short. I have several options here. One option is, of course, to look at where the POCs are. That means, of course, I can take a look at today's POC now. Yes, it's located right there in front of us. I'd like to take a slightly more general look at what we can do with the POC. That means that if we say we're going to trade away from the POC, yeah, it already looks really not too bad at all. But we also tell him that he needs to keep at least some minimum distance away from the POC. Let's see if 50 ticks are actually enough. We'll probably need around 80 ticks here or something similar, or maybe even more, like 100. Okay, I'll try 100 and see if the result gets worse in any way at all. Yes, because if the result naturally gets worse, it doesn't make sense. But no, the result gets better. We have 76 trades with a win rate of 70%. Okay, yes, that means that here we can, of course, move up a bit more. Yes, and now it's getting worse with way fewer trades. Yes, okay, we should definitely keep that very clearly in mind. Yes, so we should probably set that to 100 too, if anything. And now we can, for example, look at the prior day's POC. Yes, where exactly is the prior day's POC? I'll start by looking at the daily POC first. I already took it out. Okay, now the previous day's POC. Yes, the prior day's POC is here too, right? That means we collected all the volume here, the market runs up to here and doesn't get above this level. I could, of course, try doing that here as well, and at the very least clearly specify to him that he really shouldn't trade within the previous day's POC range. And we should probably take another more careful look at that right here. That means I could enter 50, 100. Oh yes, sure. So now I just need to quickly start up the backtest again.
And I think it may have gotten a little bit worse, unless I'm mistaken.
I'll just set this aside for a moment. That means now we're going to take the presentation poker out again. Yeah, the drawdown has increased just a little bit, yeah, and the hit rate has, of course, improved slightly, okay, yeah, so we could definitely keep that in mind as well. That means now I just check the daily POC, basically the overall range, so that he doesn't trade in that area. I think we've already configured those parameters. This looks like the best possible setup, this result with a 70% hit rate. And now, of course, we can take a slightly closer look at one more additional thing. In theory, I could of course activate both of them as well, so let's take a look at how the whole thing behaves overall. It doesn't get any better because of that. That means I actually do have the occasional trade within the prior day's range that could then lead to a somewhat better result after all. Yes, I'll test that once again now with 50 ticks. And the result here is relatively good once again overall. 73% hit rate overall. Okay, I'm going to take this one out again anyway and run the test here one more time again. From 76 down to 68, the hit rate was a little bit better overall. Okay, what other options do we have available right now? Yes, for example, we could take a much closer look at the magic line. That means we have the magic line displayed here. Yes, and right here as well, I can clearly see that it's positioned right in front of it. Yes. That means I would activate the magic line and tell it very explicitly that it shouldn't place any trades at all within this specific range. Then, of course, I have to check very precisely how many ticks that actually is. I'll simply enter 100 right here, just like that, and then we'll end up at 30 cm. Now I'll take a quick look at this POC range again to see whether I still need to keep it. Yes, in principle, I generally don't think the idea is bad that he shouldn't trade within the POC range, but instead break out. So even that doesn't really change anything at this point, I believe. Yes, so at the moment I'm sitting here at 13,084 with an overall drawdown of $863, yes, across a time period of 100 days. A span of 100 days is roughly about 5 months, give or take. And like I mentioned, this right here is 2 micros right now. That means, of course, I could also move up to 4 micros here. We can simply do it as an example. So if I switch over to 4 micros here, then I have to adjust my risk parameters accordingly and tell it that it is allowed to trade up to 8 contracts in total, meaning 8 micros. And then I end up at 26,000 here with a maximum drawdown of $1,700. I could, of course, try to get even more out of it, but I really don't want to. Yes, that means this is a setup for me that I can personally let run simply on the side. Yes, of course, you can take another look at the trades here and see what the whole thing actually looks like overall. Yeah, like I said, we don't have trades every single day, but that really isn't the main point. Yeah, the trades that actually do come along, they tend to go through with a very high probability. We're sitting at over 70% here, and we also have a very solid risk-reward ratio. Of course, we could try again here now to simply take out the view up. Where is he? We've already optimized things quite a lot. That means if I take this one out right here, I might be able to take even more trades. Yeah, but then I've got this kind of kink right here. What else could we possibly do about it? I'll put it back in. High and low filters, like I mentioned, it's always kind of a tricky thing, right? There are times when it works really well with breakouts at the high, right? That means, especially right now when we're in a longer trend, you can of course manage that, right? If I notice that, okay, we're getting back into a phase where we're starting to move back into a range, then of course I can switch that off, yeah, or rather switch it on. Otherwise, I'll just leave it turned off for the time being. Over a longer period though, it's more difficult. But even then, I mean, if I turn it off completely right here and right now because of the setting we just made, I'm still sitting at 70% right here. 30,000 within just 5 months. Yes, it's really not that much, I know. But it's still essentially just a setup. Yes, only using micros and with a very large stop loss. Yes, of course, I can use the setup just as well on a smaller time frame. Yes, that means that, of course, I then have to go further into the order flow parameters and take a look at what's happening here. Yes, and how I then get into the trades. Yes, I can, of course, do the exact same thing here with, I would say, with those kinds of setups. This is about setups that can actually run for a little bit longer that you can also make money with, and all of it on the side as well. That means I can, of course, set this up in the exact same way for basically any other market right now. Of course, I'll need to adjust it just a little bit, but basically it works in pretty much the same way across every market. Yes, otherwise, if you have any ideas, requests, or suggestions regarding what kind of setup I should create, then please feel free to write them down in the comments. Otherwise, you can still test the bot just as usual. I mean, sure, we can absolutely also trade this whole thing using the minis here, of course. That means if I go back to the tick value here and adjust the value here to account for the commission, then I've got my 300,000. That means 300,000 in 5 months, yes, with a maximum drawdown of 17,000. I have to be aware of that. And if my account allows it, I can of course just let it run like this. Yes, but even if, for instance, I decide to go with just one contract here, I still end up at 76,000 with a drawdown of 4,296. As you can see, quite a lot is definitely possible. Yes, that means this is, as I mentioned, just one single setup that you can also run additionally. Yes, that means if I have a setup here in the ES, in the NASDAQ, and if you like also in currencies, in the Russell, in the Dow, in oil, in gold, then I have a whole lot of different possibilities here where the bot actually generates money for me. Yes. And I can run all of that in micros, nice and relaxed, and of course also scale it up as the accounts grow. Yes. Okay, but that's enough for now. I wish you continued success and good trades. If you have any questions, feel free to message me, and otherwise feel free to join the Discord server. See you then. Ciao, ciao.